Hey everybody, this is Jim Hiles. It's February the 7th. It's Market Monday. We're actually Monday afternoon here. The market is holding up okay, which is great to see, particularly after getting trounced here last 3 out of 4 weeks. Pretty rough January. Glad that's over. Hopefully it is over, at least from a correction standpoint. We're looking to get a positive week here, hopefully 2 in a row. We've had some pretty decent reports. The jobs number, you got to be careful with that jobs report. It did report some pretty big numbers, but you have some participation rate issues in here. So got to be careful. Yields have definitely spiked a little bit on the 10-year treasury, up over 1.9%. We're getting close to that 2% number. I wouldn't be surprised if we clear it. That's going to be a pretty big mental hurdle to get 2% on the 10-year. So we'll see what happens with that. From an earnings standpoint, really not that bad. I mean, earnings have been fairly good, and we're still in earnings season. So January was bumpy, though, 5% down in the S&P, and NASDAQ was down 9%. When you look from the jobs perspective, pretty good job report, but you got this annual adjustment thing, which is just weird. When you start doing the math on this, these adjustments that they do just make the numbers look, they skew the numbers. Let's put it that way. It's not as good as what these numbers are saying because they're going to go ahead and adjust them again come June or July. Oil is a little bit of an issue. We're up to $92 a barrel, the highest level in a number of years, at least 8 years anyway. That's another tax. So that's going to impact the economy. It's going to impact the pocketbook. From a NASDAQ perspective, I mean, we've been all over the map here with tech stocks. It's been a tech dump and then a tech pump, it seems, but it looks like we're okay for the week for tech stocks. Seem to be holding their own after a pretty significant crash or correction, I should say. Price check in terms of where the government's inflation numbers are, I mean, 7%. We're not keeping up with that from a wage standpoint, so that's a little bit of an issue. You look at numbers year to date, Dow's down 3, NASDAQ's down about 10, S&P's down about 5.5. Internationals, believe it or not, are holding up better, which is what we've been saying here for a while. Maybe this is time for international stocks, particularly the value stocks, which a lot of international companies, at least in Europe, are considered to be value stocks. So they are doing what they're supposed to be doing in a portfolio. They're diversifying, getting returns outside the United States. Volatility is pretty elevated still, so we're still going to have this up and down market situation. I wouldn't be surprised if we sort of jockey around here for a while, as we digest these numbers. I think we'll probably hold up. There are a lot of indicators out there which are just darn right negative right now. So we got to be sensitive and respect that. It's not as if we're going hog wild buying stocks right now. We're very careful in terms of what we're doing. When you look at what the quote unquote heat map is, get a feel for where in the stock market you potentially have some safer places. Large cap value, banks, energy have been pretty good performers, some material companies, things like that, some industrials. But the rest, particularly the small caps, have just gotten their butts beat. So they're down almost 15% on small cap growth. So that's kind of where it is. I don't think we're signing off on a correction or a recession anytime soon. As a matter of fact, we're not. This is not unusual if prices got a little bit too hot, which they did. And we're watching them to make sure the numbers come out. February is not usually a great month for performance either, just historically. So we're keeping an eye on the caution signals here. And bonds really have not provided much downside protection either. They're also down a couple percent this year. So it's just one of those points or an inflection point, they call it, a transition point. You kind of figure out where the value is in the marketplace, and then money's going to go find that value. So watching it for you. Just want to make sure that you're hearing it from me. If you have any questions, let me know. Thanks.